Ann, welcome. Nice to have you with us.
Thank you for having me.
So you say the market is just sort of anticipating a little more than the Fed is likely to give. How much more is it anticipating than you think the Fed is likely to provide?
Yeah, it's a million-dollar question. It's hard to say, Tyler, but I think the market is anticipating at least 6 cuts as we head into 2024. And to me, it's pretty hard to have it both ways. It's pretty hard to have a economy that, you know, looks to be pretty stable and strong and still pricing in 6 cuts for next year. It feels like if we're going to get 6 cuts, the economy has to weaken in a significant way, or the job market has to look much more weak than it does.
So if the market doesn't get the 6 cuts that it is pricing in or anticipating, then what is the effect on the market, which, as we've just pointed out, you're seeing all-time highs on the Dow and close to it on a couple of the other barometers. What is the market reaction likely to be? What does it mean for example, the Magnificent Seven stocks that have led the way this year?
It's a great question, Tyler. I mean, I think what makes me a little uncomfortable is the multiple expansion we're getting off the excitement. Now, I understand it. As soon as Powell came out and kind of confirmed that rate cuts are next and kind of became a little bit more dovish than he was just 12 days prior, it did signal to the market that, you know, the Fed put his back again. And so that is not a surprising reaction. What does make me more uncomfortable is that multiple expansion that you get immediately without fundamentals first coming. And so areas like the Mag 7, which did have good earnings in 2023, but also appreciated due to multiple expansion, it's going to be much more difficult for them in 2024 to continue to grow earnings at the same rate they did in 2023. So what we're doing is looking more broadly across the markets at areas that didn't participate in 2023. Those areas have much better risk return in 2024. Areas like healthcare.
Well, the only thing, Ann, is that that's kind of the consensus right now. So we go back to a year ago, and obviously the consensus was recession. That didn't happen. So at what point, if we get into 2024, if the Mag 7 are up 10%, do you change the playbook?
Yeah. I mean, Kelly, like, look, I think the playbook and consensus was very different probably 2 weeks ago than it is today. Everybody is very, very bullish. And, you know, I don't think the market has turned away from the Mag 7. I think there is still a belief that there's still good earnings growth there. We've just really are hesitant to believe that the earnings growth can be as good. And if you look at relative earnings growth, I think healthcare shows earnings growth of 20% or more, probably the best earnings growth of all the sectors in the S&P and across some other indices as well in 2024. We think if that's achievable, you're going to get multiple expansion on top of that, leaving much better risk reward in sectors like that, where, yes, you've seen some appreciation, but you haven't seen it driven by both earnings and multiple expansion. So again, we're looking much more actively at areas of the market that just haven't been pushed up all on multiple.
Right, absolutely. No, believe me, I get it. It makes sense. And thanks very much for joining us. We appreciate it today.